We have talked about, in order to get commercial agriculture going, you need to have the production linked by value chains into markets. So identify the market, start the market, get those contracts, work the way down. In one of the presentations we'd seen, well, we can go to the multinationals, you can deal with Coca-Cola, you can deal with Mars, et cetera, and those multinationals are in all our markets. So you hear the same names in Africa as you hear in Asia, as you hear in Latin America. It's always the same multinationals. On the flip side, you have nation states saying we want to develop an industrial manufacturing and processing base. We want to have something that we can do value add ourselves, and we have to have it within the nation. So they want to start making their juice and their peanut butter and their cornflakes, et cetera. So there's this gap in terms of how does one do it? So the banks and the microfinance institutions and the co-ops are sort of ideally placed because they see the financial aspects of the transactions. Do you have business development services? Do you task your loan officers, or do you task yourselves to start building those value chains, identifying gaps, and then saying we're going to take private equity from here, a shareholder from here, bank debt from there, and now we have a juice plant, and now we know where we can sell our pineapple and our guava. You know what I'm saying. So the question is, are you actively engaged in that kind of traditional, old-style investment banking, maybe formally or informally, and how do you do it?
As a bank, we originated as a corporate bank, and then we moved to retail, and many years later into agriculture. There is a lot of interest in investment in ag processing and things like that. There's a lot of M&A activity starting to blossom in this space. So we actually have the investment banking team has a dedicated resource and a dedicated fund to my department, which is the agriculture department, looking for these opportunities. So we have that in place. That is one side of it. And going back to the earlier question that you mentioned, where corporate banking lends to a company and the company on lends to the farmer, we used to have that, but now we have switched that around, partly due to the change in the regulation, which does not recognize that as agriculture anymore. So we brought those relationships under supply chain and freed up those balance sheets, like Carlos was mentioning yesterday, and taken it downstream right up to the farmers. So, and internally, we have built a transfer pricing with the corporate banking team, so they don't lose either. And that's how we build this piece. So between corporate banking and the large companies looking to acquire smaller companies in ag processing, looking for investment, we have that kind of expertise within the team, because we started out with bankers on the top and then went into agriculture.
Right.
So the top layer is still very much banking, rather than agriculture.
Okay, thank you.
Well, we do have it, and because of the fact that we support the business across, so we do support the investment banking as well, and that is really looking at the mergers and acquisitions. But from an agribusiness perspective, when we talk in mergers and acquisitions, if we're talking South Africa, yes, it makes some sense. When we start looking at Africa, then we find that there's a big gap, and it's purely because of the size. The corporate clients that come in from investment banking, the kind of investments they're looking for, are too big if you look in terms of what I see from an African perspective, in terms of the development perspective. So for that, I would say that, and yet the investment opportunities I find out there are there, but small. So there is a gap in that there are investment, but they are too small for the kind of corporates that we deal with. And there, I must admit, that's a big gap that we currently have, and it's a gap that's going to be fulfilled if we're going to see the agricultural potential turn really into an opportunity. And the question might be, actually, what is the solution around those investment opportunities?
Right. If I might ask you a specific question, in case there are some venture capitalists out here, when you are talking, when you're talking about too small, what is the size?
Well, you might find it's about 1.5 million US dollars. That I
That's
would say-
small.
That is for corporate clients, that is small, but for most of these investments, that's again a big investment. So I would say that varies from 1.5 to about 5 million as the opportunities that are there. And any of you that are within an African environment, because I'm more of the African space, you'll find, say, a coffee hulling plant that is actually all built out of timber. It needs to move to the next level, but it can't move that. To an established bank, when you look at it, yes, you see it's an opportunity, but there's no collateral. Everything is missing. And the question is, how do you actually sort out that? That's the gap I see. Yeah.
Wonderful.
In our case, we do not have a dedicated resource or a dedicated platform with investment banking on this front. However, of late, with an increased interest of more and more entrepreneurs to come into corporate farming, both on the crop side as well as on the dairy and meat side, there's an increased interest. And because of that, on a need basis, we actually have started doing certain transactions along with our investment banking. But again, I would say it's not that structured, but I can foresee that it's a matter of time that probably it will become very structured, and because more and more investments and more interest is coming into this field.
And you're so well placed because you've got the information, you know, in terms of the economics of each one of these
You are
businesses
right.
and the value chains. You're perfectly placed to facilitate it.
Yeah.